Good morning, our predicted trades family. Good morning again. For all of our new folks, I dropped an introduction video that I just did live, so go check that out. And I'm going to dig into a quick prep because it is getting so close to open. Yes, we were back at the daily means, had our rejection sell-offs, new low of year. Now we've bounced. From that second Keltner into a whole bunch of squeezes going into FOMC. For the new folks, these are some of my tools. Actually, everything you see on the screen except for VWAP, which is that blue dotted line, is some custom tool that I've created. These clouds represent where the squeeze top and bottom are for different time frames. You can click on any of these and adjust their time frames. So we're looking at a 2-hour squeeze that I just clicked on. You can bump them up to daily and whatnot. I keep a number of them on. This is most likely a 4-hour, yep. So we pushed through and fired a 2-hour up and then flew through the 4-hour to get back to the daily means. The orange is the 15, the blue is the daily 8, and the yellow is the daily 21. That's what we call the daily mean, our home base. So yesterday we rallied up and almost tapped it, but we got held up at the daily 15. And now we're starting to slip back. We don't have any squeezes in TAC anymore. A lot of the time we like to try to play off of these squeezes. So like on Monday, we played off the bottom to the top. We reversed, started shorting, and then near the end of the day went long again. So we kind of play off of these squeeze top and bottoms. So today no squeezes intact. I would not be surprised to see us slip back and test the daily 8. Ultimately, we are in between daily 21, daily 8, and daily 15. So a whole bunch of big money liquidity, institutional buying at daily moving averages. So wouldn't be shocked to just kind of see us chop around. We have been in a downtrending bear market where we keep getting sold off from the means back down to the daily Keltners. These hash lines represent daily Keltners, first, second, and third Keltner down. So we have to see that we might again see rejection at the means and go back down to visit lows. I would say we've been sold, and we could need a little bit more of relief before we do any new low of years, but we'll just be watching price action to see what we get, and our main guides today are going to be the moving averages and the interactions with those. So on ES, upside targets, the daily moving average, or the daily mean, the 21 at 4,300, 4,310-ish. The daily 50, which is up at 4,370. The first Keltner up, which is at 4,400. Downside targets, this daily 8, 4,240. The first Keltner is right back at that psychological 4,200. Should we actually start to engulf yesterday? 4,150, right? And Q. Oh, one thing I'll cover on ES. I did keep this blank of my normal drawing set, but most of the time we are looking at some of my key levels as well. My big key level is 41.36.5. We have bounced here multiple times this year. We have only slipped it a little bit. So should we actually start to engulf, this is where I'm expecting a bounce. And I have key levels at 41.65. So I usually cover those every morning as well with my drawing sets. In Q. Yeah, we want this one. Same story. it ran up, and we are now in between daily moving averages, daily 8, 15, and 21, creating a nice wide range for us for today. So definitely going to be keeping an eye on those. And these key levels, I always love it when a moving average is right on top of a key level. It can be a good magnet. We also use POC, point of control, center of gravity. So that's always something that I keep in my watch list so that I know where it is. Right now it's a little down, so should we get back and start engulfing, this 13,150 is huge, and 13,104 where POC is, so that creates a pretty big zone of support should we actually slip down that far on NQ. Ready, we don't trade very much in here. We have futures traders, but they mainly focus on ES and NQ, so we watch it at least for a gauge on a lot of things. We have folks in here like to trade shop and whatnot, and it can be found in the Ready. So the Ready is back over 1900. That's very key for upside for the Russell this year. So loving it above 1900. Want to see, and I love seeing that the first Keltner down is right there. So it's basically good support should we slip back. That's kind of my big key. But already tapped the daily mean, whereas the other indices have not quite. The Ready we've found can kind of overswing and hit these things first and give us an indication for what's going to happen on the others. YM, oh, okay, now YM made it back to the daily moving average, got up to the 50, now falling back a little bit, and has the daily 8 down here to save it. So kind of expecting YM to hold that today for upside to get back through the 50 and the 21. Should it start to give that out, we'll end up right back in yesterday's range at this first Keltner down. Apple. Looks like we still do have a daily squeeze intact. Oh, and we had one on YM, sorry. Okay, yeah, daily squeeze is still way down at the lows that we were at and way back up above the daily 200 and 35,000. So, Apple. Oh, nice. Apple does have a small little 30-minute squeeze that has started here. And the bottom of which is kind of aligning where the daily 21 is going to be sitting today. So these moving averages are all going to pop in at open. So wouldn't be surprised to see Apple swing back a little, hit this squeeze bottom, which will fill out a little more before open. Hit some of these moving averages, hold those, get back up to the squeeze top, around this 167.5. But we do have the daily 50, 21, 15, and 8 all stacked together, so don't be surprised for a little chop there. And we are firing, what is this? A 4-hour squeeze fired up with that push yesterday. Should we start to slip back, 162, well, I mean, the daily 8's going to be right about there. And first Keltner down is at 158. So 160 is going to be pretty key if we do actually start engulfing. AMD, good earnings, sold it back just to pick it right back up. Knocking on 100, so that's going to be key as well. No real squeezes intact. So watch your key levels, interaction with the highs and the pre-market lows. There. Amazon. Oh, Amazon. Been so oversold and down at the third Keltner. It still does have a 2-hour, 4-hour squeeze. So if we zoom in, we can see the top and bottom of those kind of sets a nice range for today. Amazon still does have the split coming up, and I am going to be shocked if they don't run it up into the split. So definitely keeping a huge eye on Amazon as that split date is getting on like less than a month away. So definitely going to be watching these higher time frame squeezes, 2 hour, 4 hour, just for fun. Let's throw on a daily, a 2-day. Okay, no 2-day. I guess this drop kind of obliterated all the squeezes, so I know it's fallen hard, but this does have a split coming up and a lot of investors, so I would not be surprised to see this thing to have a tear this month, maybe towards the end, but definitely going to watch the higher time frame squeezes for when they start firing to the upside. Cat. Looks like it did have a 2-day squeeze that it tagged the bottom of, and it's starting to work its way. Yep, that's a 2-day squeeze. So fired most likely a 4 hour, yep, to the upside, and is back above all the daily moving averages. Let's see if it just wants to pull back and slap those again. The daily mean at 217. POC down at 212, near the daily 50. So 2 good spots for a bounce and to go long, and for us, cat to get pushing back up to those recent highs of 230, 240, where that 2-day squeeze is. But cat already starting to push into and near the first Keltner up and above the mean, so good gauge to watch for YM. Facebook, great earnings and just guiding up, leaving that gap behind. So Facebook definitely in play these days. Looks like it's kind of done getting beat up. It's already up above first Keltner. So relative strength, it's worth keeping an eye what names in tech are already through the mean and above, and what are still struggling. But Facebook and Google XLC was very strong yesterday. Facebook does have a nice little 30-minute squeeze that's forming, and it's near the bottom. So let's see if Facebook and tech try to give us a little pop at open, and we see the market retest the daily mean, then come back down, or just keep going, or let's see if we can't hold the squeeze bottom and just start to slip to retest the daily mean. Not the daily mean on Facebook, but Google. So Google is not quite to the daily mean, so not, like Facebook, which is a Keltner above. We're just pulling up to the daily mean on Google. Let's see if we pull back to retest 2400 before rocking up to 2480. GS off of that 2-day squeeze bottom on a nice trend. Do still have a daily squeeze that's intact, as well as that 2-day. So let's see if we can hold the moving averages that we're at. The 21 and the 15 are stacked right on top of each other, and the 8 is right below. So let's see if we can hold this 317.5, 320, and start working our way back up to the daily 50 at 330. JP Morgan pretty much got back to the mean, pulling back pretty hard this morning to this big key level, funny enough. We do have POC way down below, so we need volume to start stepping in and up here to drag POC up, since POC can move around. Microsoft was kind of weak early yesterday when other names like Apple were a little strong. But either way, it hit this gap fill from earnings yesterday on the drop, basically reaching in to the lows of Friday and kind of Monday, and that daily Keltner before taking back off, back above the daily mean, even pre-market, so keep an eye on those. The daily mean at 286, another's down at 283, daily 8 at 283, daily 15 at 282. And there is a small 30-minute squeeze. Probably going to be around 285 at the bottom. We're kind of pulling up to the bottom. Tops up at 290. Netflix. Netflix has been down on earnings. And although it's had some good moves, I try not to focus on something that is down hard on earnings. It is still in all these squeezes, for instance. It is still below third Keltner. Yeah. So let it prove itself. Let it make a little bit of a comeback and get back to normalcy, because it can just screw around in this range. So, not a huge focus on Netflix when things are moving. NVIDIA, still in a, what looks like maybe a 2-day squeeze, no, 2-hour squeeze, which is pretty wide. The bottom back down kind of near yesterday's lows at 190. We are at the daily 8, falling back from the daily 15. So let's see if we can hold the daily 8. This first Keltner down, which are kind of stacked on each other at this 197.5. If we lose that, 195, if we're going to engulf like on the market, like we've talked about, 190 for the squeeze bottom. But if we can find our ground, and get up to this squeeze top at 205, we do have the daily 21, which will step down a little bit near this 210. Q's rocketed up from our key zone here. Let me get the other. Let's feature AP's levels just for fun, because it'll give a great roadmap for today. Damn near tagged this 313. All the way to 330. Coming back. Daily 8's going to be around 323. So definitely watch these key levels. Let's switch them off just to see a little easier. We have the daily 8 down at 324 and this first Keltner down at 322. So that's creating a nice zone of support. Overall, we are on this downtrend, so we need to see it hit something, some support, and start working its way back up. Or it can continue down to revisit yesterday, right? So we'll be watching tomorrow's expirations. I'll definitely be watching some strikes out here in the 320s, as well as the 332s, 335s. Roku has had decent earnings and been guiding up. So, just like Facebook, Roku might be back in play now, unlike Netflix, which is still way below third Keltner. So, Roku back above the daily mean. We have them all stacked pretty much right here from 101 to 105. So basically, looking for it to hold anywhere in there and keep chucking up to the daily 15, or the daily 50, which is up at 116, and the first Keltner, which is at 115, making a nice little zone to the upside. POC stepped up to 103. So if we lose the daily 21 and come to maybe test this 15, we do have POC at 103. So that could be the support that sends us up. Shop. Oh. Down on earnings. Already so beat up. Not really going to cover it. Snow has earnings coming up later this month. Squeeze bottom. Squeeze top yesterday, but still within it. So not a huge interest for me in Snow right now. So watch it around these daily moving averages and these Keltners at these levels. SPX actually had a squeeze show up yesterday. So as you know, I got, tons of squeezes, 31 hour, 2 hour, 4 hour daily, 2-day, all loaded on this chart. We only get them every so often because it moves so much. We had a squeeze yesterday for FOMC, and tagging that bottom is what shot us up even before Powell spoke, right? Then we get our little Powell blip and off to the races. SPX pretty much back to the daily mean, but we're gapping down a little bit. So definitely watch the daily 8, this first Keltner down to try to keep us above 4,200. If we start to lose 42.19, we're going to get to 4,200. But if we can hold up at some of these levels, push back through yesterday's high around 43.03, we have the daily mean and the daily 15 right up, making a zone from 4,300 to 4,315, getting through that daily 50 at 43.75. And I should have levels. Where are my levels? There we go. Yeah. Keltners and moving averages will be a good guide for now. Oh, SPY. So I've got a couple of levels that I try to kind of pair next to each other that should create nice zones of support. So on SPY, we're on this downtrend. Let's see if 422, 82 to 423, 53, if this zone can cause our bounce. If we slip this, it'll fall fast to 420. We do have the daily 8, which is going to be in the mix there too. And should we continue any further past 420, it's going to get to these levels, right? We bounced at the bottom at this 413.9 yesterday. And right at the top, this 428.86. So these are my key levels on SPY, downside, upside. Should we actually get above the daily mean and this 431.54, we could accelerate quickly to the daily 50 up above. We closed at 429. We have an ATR of $9. We can get to the daily 50 today if we really wanted to. SQ back above 100. Their earnings are today after the bell, so going to be keeping an eye on that. Let's see if we can stay above 100. But I'm going to accelerate and wrap this up. Tesla. Good hold of kind of that 890, 888. Yeah, where's my other drawing set? Yeah, I had a level at 888 on one of my drawing sets, but either way, that was kind of the bottom yesterday. Ran up to 950. Key level at 918 and 930. So let's see if it wants to pull back and slap those before heading back through 950. It does have a 30-minute squeeze starting to form. The top of which right around that 953, if we can get through that. And the daily mean, obvious targets at 1,000, which has held beast this week pretty well and provided a couple of trades. Real quick, we also like to check in on VIX. VIX yesterday, these key levels could not get going off of them to even go test 30. So that was a great sign early in the day that we're going to go up on the market, which we did off of those squeezed bottoms. VIX fell through 28 all the way down to 25. Now back at 26, and VIX does have daily moving averages in this range, right? So let's see if it wants to get back up, test 27, 28 today, which would cause us to slip, or if it's going to reject the daily mean and 27 and head back down below 25. But overall, this is kind of how the preps go. I try to give upside, downside targets. I try not to influence any bias into our decision making. I just try to use the tools that I've built and the system that I've built with our beast numbers to give us a roadmap and a guide so that we can read price action and react accordingly. Hopefully this prep was helpful for all of you. Welcome to all of our new folks that came in yesterday. I think it got up to 15 or 16, so we love having you all here. Feel free to ask any questions. There are no dumb questions. We will give dumb answers. So see you in chat. Thanks, everybody.